You keep hearing about dividends. Some old guy says dividends are the key to wealth. Someone else flexes their $8 Robinhood payout like it's a second income stream. Meanwhile, you're still asking yourself, what the hell is a dividend? You hear the word dividend and you think sounds boring, probably for old dudes in cargo shorts. But here's the truth. Dividends are the only passive income that doesn't involve lying, leverage or losing sleep. Welcome to Tough Finance, where we don't sell you dreams, we explain how boring wealth actually works. We're breaking it down like you're not a finance major, but you're smart enough not to pretend you already know. Today's question: what the hell is a dividend? And why you should care before you end up broke at 40 with crypto made me poor hoodie. Section 1. The dumb, brutal, honest definition. Here's the real definition. A dividend is a company paying you real money because you own part of it. A dividend is when company says, thanks for investing in us, here's a slice of the profits. You don't have to sell anything, you don't have to flip it, you don't have to pray for price pumps. If you own shares of a company that pays dividends, they send you cash, usually every 3 months, because you're a partial owner. Not stock appreciation, not meme hype, not pixeled apes, actual money in your account regularly. It's like getting a tiny paycheck just for holding onto a piece of something real. Own stock, get paid, repeat. Simple, beautiful, boring, and boring is profitable. Section 2. Why companies even pay dividends and how it actually works. You might be thinking, why would a company just give me money? What's the catch? No catch for once. Let's break it down without sounding like a CPA. You buy shares of a company instead of Uber Eats. That company makes a profit. Instead of hoarding it all, they send part of it back to shareholders, usually quarterly, sometimes monthly, sometimes when they feel generous. Okay, they're profitable, they have more cash that they need for growth, they want to reward shareholders and keep investors happy. Think of it like, hey, thanks for believing in us, here's a slice of a profit pie. Except instead of a pie, it's a $32.70 direct deposit into your brokerage account. Example, you own 100 shares of Coca-Cola. They pay 46 cents per share every quarter. Boom, $46 in your account for doing nothing but existing. And nothing, I mean you bought it long time ago, now you're getting benefits every quarter. That's a dividend, and you didn't have to drop ship junk from Alibaba, dance on TikTok, or sell your soul for an NFT of a raccoon in a top hat. Section 3. The types of companies that pay dividends and dividend stocks versus growth stocks. Quick distinctions. Dividend stocks. Companies that are so mature they hand out cash because they literally don't know what else to do with it. Think Procter & Gamble, Pepsi, Johnson & Johnson. Growth stocks. Companies that take every dollar they make and reinvest it into taking over the world. Think Amazon, Tesla. Neither is better, but if you want steady cash flow without selling assets, you want dividends in your life. Here's who actually pays. Big boring businesses, think Coca-Cola. Banks when they're not collapsing. Energy companies, real estate investment trust, insurance giants. Who usually doesn't? Startups, tech bros chasing growth, companies bleeding cash for market share. If a company is still fighting for survival, they're not writing you checks. But if they're stable, boring and kinda old, they love sprinkling dividends like Oprah giving away cars. Section 4. Why dividends matter, especially when the world is burning, and how dividends actually pay you and grow. Stock prices go up? Cool. Stock prices crash? Cool. Dividends keep paying, assuming company isn't dead. In fact, some companies pride themselves on increasing dividends even during recessions. Shout out to the dividend aristocrats, companies that raise payouts for 25 plus straight years. Imagine getting a raise while the economy is on fire. That's the power of dividends. You get paid in cash. You can take the money, direct deposit it, blow it in on a coffee wherever, or reinvest automatically. That's the smart move because it compounds. Reinvesting means your next dividend is bigger, and the next, and the next. It's like a snowball, except instead of snow it's money. That's the best kind of snow. And instead of freezing, you're slowly building freedom. Start small, stay consistent, wake up in 20 years surprised you're not broke. Section 5, dividend yields, where people get dumb and how to actually start collecting dividends. Every dividend stock has a yield, a percentage of the stock price they pay you annually. Example, stock price $100, annual dividend $3, dividend yield equals 3%. Sounds simple, right? Until some clown says, bro, this stock has a 12% yield, it's a free money. That's a red flag. Huge yield often means huge risk. If the company is struggling, they raise the yield to trick people into holding, then they slash it, then the stock tanks, then your $3 check turns into zero and sadness. Higher isn't always better. Consistency is the king. Okay, here's your lazy roadmap. Open a real brokerage account. Fidelity, Schwab, Vanguard, etc. 2. Buy shares of companies that pay dividends. Hint, big boring ones are your friend. Turn on DRIP, dividend reinvestment plan. It automatically uses payout to buy more shares. It uses that $3 to buy portion of another stock. Remember, snowball. 4. Forget about it. Check your account every few months and smile like a smug little landlord of stock profits.
So smug, like this, like you thought it was funny.
No, it's not get rich quick, it's get rich eventually, the only real kind of rich. You want a financial freedom? It's not about winning the lottery or buying meme stocks at the perfect time. It's about building reliable, boring, automatic cash flow from assets that don't need you to do anything but exist. Dividends don't care if you're on a vacation, they don't care if you're asleep, they don't even care if you're stupid. So you got lucky on that one.
Is that like a personal attack or something? Or...
You hold, you get paid, end of story. Dividends aren't flashy, they aren't viral, they aren't gonna make you an influencer or get you that TikTok clout everyone's chasing, but they're real, reliable wealth. And in the world full of crypto collapses and get-rich scams, boring money is a survival money. And they might quietly retire while everyone else is chasing the next hype cycle. This is the tough finance. Stay cynical, stay solvent, and let boring cash flow buy you the freedom everyone else is still trying to manifest. Let your money do something for once, without needing you to sell your soul, your sanity, or your PS5.